What if I told you that SoFi just broke out while the rest of the market stumbled? That while major indexes like the Dow, S&P, and Nasdaq were sliding into the red, SoFi defied expectations, powered ahead, and even hit a fresh 52-week high. That's not just impressive, it's a statement. In today's video, we're diving deep into what exactly fueled this surprising surge, what signals are flashing behind the curtain, and why this could just be the beginning of a bigger move. So if you're a SoFi investor, or even just watching from the sidelines, stay locked in. This is everything you need to know. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi Technologies surprised the market today with an impressive move. The stock closed up by 3.61%, moving from a low of $18.40 all the way to a high of $19.29, officially ushering in what many are now calling the return to the $19 club. That may not sound earth-shattering on its own, but context is everything. While SoFi was climbing, the broader market was sinking. The Dow Jones Industrial Average fell 0.94%, the S&P 500 dropped 0.79%, and the Nasdaq declined 0.92%. In a typical scenario, SoFi, being a high beta growth stock, would have mirrored the Nasdaq's decline or even dipped harder. But not today. Today, SoFi went rogue in the best way possible. Even more telling than the price movement itself was the volume. SoFi saw 79.5 million shares traded, far exceeding its daily average of 68.9 million. That's a clear signal that someone was moving the needle. But here's the twist. No official news broke from SoFi. There were no SEC filings, no press releases, and no obvious macroeconomic developments that would have justified this move. So what gives? Why did SoFi rip higher when everything else fell? Let's unpack that. To begin with, this seems to be a case of institutional money waking up. The surge earlier in the trading session looked like classic option coverage activity. Market makers and large funds likely closed out positions and covered options from the prior week. That kind of repositioning creates strong upward momentum and can feed into broader optimism. But that's not all. Comments made last Thursday by Miguel Cardona, the U.S. Secretary of Education, also played a significant role. During an appearance on The Charlie Kirk Show, he pointed out that the next target of regulatory action would be student loan debt. That's a massive green flag for SoFi, which operates a strong student loan refinancing arm. He also openly criticized the prior administration's approach to debt forgiveness, signaling a shift toward more structured, market-friendly reforms. This matters. SoFi is uniquely positioned to benefit from clarity and reforms in student loan policy. That sector is a core revenue stream, and any news, official or unofficial, around federal action makes investors perk up. Shout out to Crossroads, a market commentator, for catching this subtle but crucial signal. Sometimes it's not about what the headlines say, it's about who's speaking and what direction the winds are blowing. Meanwhile, the overall market seemed to be stuck processing updates around Trump's economic bill, including tariff changes. Some of these updates mentioned that several countries, including Japan and South Korea, received notices of tariffs as high as 25%. However, the market seemed uncertain and didn't react in a unified way, probably because the deadline for these tariff decisions has now been pushed from July 9th to August 1st. This gives negotiators more time and introduces more unpredictability into the mix. Interestingly, SoFi stayed above this noise, likely because the student loan reform narrative overshadowed the broader uncertainty. Now let's talk shorts. The short interest in SoFi stands at a whopping 13.87% of the free float, amounting to roughly 150.47 million shares. But today, only 180,000 shares were returned, barely a dent. Still, this breaks the trend of aggressive shorting we've seen recently. A small retreat, yes, but meaningful. especially when you factor in that the cost to borrow, the fee charged to short sellers, has risen to 0.35%, one of the highest levels seen in the past 6 months. That suggests brokers are no longer incentivizing the short trade on SoFi. In plain terms, the easy money for betting against SoFi might be drying up. The short squeeze pressure may not be front-page news yet, but it's building. If SoFi continues to hold or gain momentum, shorts may be forced to exit en masse, creating a feedback loop that drives the stock even higher. We also have to look at the options market, which was unusually bullish. There was $51 million in call premiums compared to just $9.32 million in put premiums. That means nearly 47% of all options trades were bullish bets, a reversal from the trend we saw in other stocks today, where institutions leaned bearish across the board. In contrast to other names where investors are bracing for pullbacks, the sentiment around SoFi remains optimistic, even hungry. Analysts and traders alike are expecting continued upward pressure. Let's not ignore the block trades either. Numerous large transactions over $100,000 took place, some during regular hours, many after hours. Transactions worth $10.1 million, $10.8 million, and even $4.29 million hint that large institutions like BlackRock, Vanguard, or State Street may be loading up quietly. These aren't guaranteed confirmations, but the pattern aligns with institutional accumulation. Interestingly, even with transactions north of $1 million, the market barely flinches anymore. 2 years ago, that would have triggered alarm bells or excitement. Now, it's just par for the course. That's how normalized big money buying has become in SoFi. We even saw a mind-blowing $99.7 million transaction likely to be revealed in the next round of 13F filings, which are due later this year, around October. For now, it's a guessing game, but clearly the smart money is not ignoring SoFi. Let's talk technicals for a second. SoFi closed at $19.24, just under a critical resistance level of 19.25 cents. If the stock opens strong and crosses that level, we could see another new 52-week high as early as tomorrow. The next resistance would then be $19.85, while support sits at $18.88 and $18.28. It could be a catalyst or a curveball. One important thing to note, there were no new analyst ratings, no fresh articles, and no corporate commentary today. SoFi's move was driven purely by momentum, speculation, and institutional activity. That's powerful because it shows that sentiment alone can carry the stock higher, even in the absence of concrete news. With all that said, here's the big picture. SoFi has moved from around $13 to nearly $19.30 in a matter of weeks. That's not normal price action. It's momentum at full throttle. Yes, there's always a risk of pullbacks. The chart is definitely overbought, and that could bring volatility in the days ahead. But the strength we're seeing now is undeniable. Bulls are targeting $20 to $21, while bears are hoping for a dip back to the $17 to $17.50 zone. Right now at $19.20, we're right in the middle of that battleground. Expect tug-of-war price action as traders and algorithms duke it out. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.